Hello, everyone. Greetings and salutations, and welcome to the weekly market report. As you can tell, I am not Joe Hall. I don't have the long flowing hair. Joe is somewhere over the Atlantic right now. He's taking some time off. So today, we are going to give you a nice, quick rundown of all things crypto blockchain that are influencing the market. And of course, I can't do that without our good friend and colleague, Marcel Peckman. So, Marcel, not sure where you're at, but how are you doing today?
Hi Sam. Yeah, doing fine. I'm in Brazil, but in another city. I'm in some Airbnb in São Paulo. As you can see, they have
Nice.
some nice Chinese decor. I hope that's not real gold, but I don't think so. But at least it looks good, and I think it fits the market this week. At least the crypto markets, as Bitcoin is trying to break above $25,000 and Ethereum.
Mhm.
$1,700. So things are looking good. I
Mhm.
still think that people are trying to get way too optimistic, way too soon.
Mhm.
Even if we get a
Mhm.
breakthrough to 30,000, I don't know. You guys got to
Mhm.
remember that uh, by November of last year, of 2021, we were $69,000. So we're still very
Mhm.
far away, both in price terms and in adoption terms, because a lot of the people that entered crypto industry during that summer, that craze above 55, 60, almost $70,000, they exited the market, and that's not a good thing.
Mhm.
For cryptos to survive, for cryptos to grow, we need constant adoption, and it takes years, sometimes decades.
Mhm.
It doesn't happen overnight. So even if you got a breakthrough to $30,000, I just want our viewers to remain calm and to do DCA and do whatever they've been doing, and not all in and expect a bull run to continue forever.
That is absolutely correct. And, those of you who are watching today, you should rest assured knowing that you are an early adopter of Bitcoin and crypto. I mean, we're giving you this report every week and we're love to see you and chat with you every week, but we're still very early in the adoption curve. You know, Sometimes we have to take the blinders off and realize that the broader market, the broader world, the broader ecosystem has not yet come around to the idea of digital scarcity and Bitcoin. We are still very, very early. And as Marcel, I completely agree with you. We're still very early in the cycle as well. So even if we see some immediate price action north of 30, we just had the bear market bottom or the potential bottom back in November. We're still very early with respect to the halvening and where price can go based on previous cycles, right?
Uh, yes, I think we are a little bit late on the
Hmm.
bottom. I would say if the bottom was 15, $16,000, it came right on time. But usually
Hmm.
the bull run starts a year ahead of the halvening. So the halvening, if I'm not wrong, incorrect, it's going to happen in May 2024, right?
That's correct.
So we still have, I would say, 3 months to see a decent bull run. So yeah, there's still time.
Hmm. Hmm. Well, it wouldn't really be crypto, blockchain, digital assets if we weren't talking about scams that are proliferating, right? I mean, we've covered so many scams over the years, people who want to piggyback off of this digital asset revolution by tricking people and scamming people. And I'm not talking about ICO scams here, people who take money and then don't do anything with it. I'm actually talking about outright scams. Like, have you been hearing about the whole Bing AI chat scam or the chat GPT scam? What can you tell us about some of these shenanigans that are trying to steal people's money?
Okay, first of all, the viewers need to understand the difference between a token and a cryptocurrency. Dogecoin,
Hmm.
Litecoin, Ethereum, Bitcoin, those are cryptocurrencies. They have a network of validators, they have a network of users running their own nodes. So everybody checks the work that everybody is doing. It's much harder to change consensus or to create new rules and say, well, now Bitcoin, instead of having 21 million coins, is going to have 40 million coins. you gotta get a consensus with all the users running nodes, so everyone changes and updates the software, so the change is valid. If you don't do that, you end up with Bitcash or Bitcoin SV, another coin that which much lower use. A token, on the other hand, you can create in 2 minutes or less and spend nothing, because it is a coin that is registered on another blockchain of a cryptocurrency that already exists. And Ethereum created this back in 2015, I think. So it
Hmm.
became much cheaper to create cryptocurrencies. But they rely on another blockchain, so either Binance BSC, BNB, Binance Chain, either Avalanche, either Ethereum, or even Bitcoin. There's some RGB and colored tokens that are being created, even on Lightning Network, but they are dependent on another coin. So it's very easy, cheap to create a token. So whenever there's a new trend going in the market, it doesn't matter if it's metaverse, if it's a chat AI, if it's Bing, they there will be guys that are savvy enough to create tokens with those names, create websites, and promote those coins on Twitter, on Instagram, on every social network. And they use images or logos or names of Twitter accounts that are
Hmm.
resemble the original one, but are usually not the original. So when they do this, they get some confidence from the users. Well, if Microsoft is advertising its new coin on Instagram or on Twitter, it must be a good project, so I'm going to buy it. Then they rush desperate to any exchange available to buy those coins. And usually it is easier to list a coin on a DEX exchange, a decentralized exchange such as Uniswap, PancakeSwap. There are thousands of them. So you won't see those 100% scam coins listed on Coinbase, on Binance, on OKX, on Huobi. They won't be listed on the top 10 exchanges. They will either be listed on very small unknown exchanges or at decentralized exchange. So there are many ways that those scammers can steal the money without even doing an ICO, and we can discuss that later. But what you need to realize is that if a coin is not listed on a top exchange, if the coin is not mentioned on an official website of Microsoft or Bing or whatever, stay away. Stay away. The worst case scenario that it can happen to you, is you miss the launch by 12 hours, 24 hours. So you're not going to buy it on pre-ICO. But if the coin or if the project is the next big revolutionary thing, which I don't think there will be any, but if it is, the
Hmm.
worst problem is that you're going to lose 12 hours or 24 hours. So wait until there's an official announcement on the official website of those companies.
Hmm. And Marcel, you made a good point about these tokens and where they're listed. In terms of the Chat GPT scam or the scams that we're seeing around the Chat GPT, it seems like a lot of these new tokens are being issued on BNB chain using that technology. Is there a particular reason why these scammers are minting them on BNB? Is it easier? Is it more accessible? What could possibly be the reason?
Well, I can only imagine it's because of the cost, because a
Hmm.
transaction in the Ethereum chain, either for the user to buy the coin on the decentralized exchange, or for the person to launch the coin and give a lot of, how to say, they have to put order pairs on the automated market making pools to provide liquidity. So they have to make a lot of transactions and deposit a lot of coins. So it is cheaper for them to do it on BNB coin or on Avalanche instead of Ethereum. But you're also going to be seeing those scams on Ethereum. But they're focusing on the user uh, saying, well, I'm going to invest $200 instead of $20,000 because it's a new projects. So they don't want to
Hmm.
pay $5 or $4 transaction fees. So that's why they prefer the BNB chain. It's cheaper.
Very, very interesting. That, everyone, is your public service announcement for the day. Please beware of the ChatGPT scams. I mean, ChatGPT is basically one of the biggest, hottest trends right now. You can't go on Twitter without hearing about it. You go to the Google Trends, everyone's talking about it. There's scammers now that are targeting you with coins, with tokens, and that's a nexus of hell right there. Trending versus crypto scams. It's going to hurt a lot of people. So please be aware and please be vigilant with respect to evaluating these projects, especially those trying to capitalize on this trend. So very good, Marcel. Very good insights. Go ahead.
Yes, if you can share a screen, there's even a news that Cointelegraph published 11 hours ago. Bing ChatGPT pumping tokens by the dozen. It's a report by the security firm and blockchain analyzer Pack Shield. Do you have this news
Hmm.
for us to share?
Let me take a look, see if I can find it here. Yep, I found it. I'll share the screen here.
So, blockchain security Pack Shield on Twitter said it found dozens of pump and dump tokens purporting to be
Hmm.
related to GPT.
That's
So, it's
correct.
raising alarm. Many tokens claiming to be artificial intelligence powered, and Pack Shield is saying it's only a honeypot schemes, and there are
Hmm.
many of them. They can impose a sell tax of up to 100%.
Hmm.
So whenever there's a
Hmm.
transaction with the token on the BNB chain or on the decentralized exchange, 99% of the funds or 100% of the funds will be sent to the token creator instead of the
Hmm.
seller. So there are multiple ways that they can scam, and even an experienced trader won't be able to detect those small alterations on the smart contracts issuing page. It's very hard for a
Yeah.
non-developer to find spot those scams.
Yeah, and to that point, shockingly, according to PeckShield, this article here, which was written by Stephen Catt, basically, according to PeckShield, at least two of the tokens identified have already lost nearly 100% of their value. So clearly a pump and dump. And here in this article, we do a good job of explaining exactly what a pump and dump scheme is. A pump and dump scheme typically involves the creators orchestrating a campaign of misleading statements and hype to persuade investors, you and me, into purchasing tokens, then secretly selling their stake in the scheme when prices go up. So we don't want to be the exit liquidity for these scammers. It's very, very important that we watch out for these fraudulent projects as they're being minted to capitalize on these trends. So it's a scary thing, but if you pay attention to Cointelegraph, we're actively involved in like uncovering them, and a great work there by PeckShield to raise awareness. So on that note, I think we're going to move on to the market news section here, Marcel. And I think the first article I really want to touch upon here is Bitcoin active addresses. We were talking at the beginning about whether Bitcoin was actually in a bull market or not. Should we be excited? Should we be more reserved? I think you and I are on the same page that it's a little bit too early to be really excited about the Bitcoin bull market. I mean, we've had a very healthy bounce from the bottom or from the supposed bottom of 15.6K late last year. We're looking at around 24 to 25,000 Bitcoin right now. But according to at least one trader, Bitcoin active addresses have not really kept up with the recent pump, meaning that if you take a look at adoption, what you and I were talking about earlier, it doesn't seem like the adoption curve is matching up with the price of Bitcoin. So, according to the article written by William Suberg, Bitcoin lacks active address growth and significant on chain volume, and a divergence from previous Bitcoin bull cycles or bull markets. So, you'll hear a lot of crypto analysts and Bitcoin analysts talk about the past. Well, because Bitcoin's only been around for 14 years, we don't really have a lot of data to capture how Bitcoin performs in various macroeconomic cycles. So we often rely on the past to be able to predict where Bitcoin can go in the future because investor psychology doesn't really say the same. It doesn't really change. The cycles of greed and fear remain constant. So Marcel, do you have any words about active addresses and what that could mean for Bitcoin's price, if anything?
Yeah, Active addresses is one of the only on-chain instruments or indicators that I regularly turn to because uh, I don't really care if an address is sitting on those coins for 4 years or 1 year or 6 months. If he paid $20,000, if he paid $60,000, first of all, it's really hard to measure that because most of the volume happens on centralized exchange and we have no transparency of what's happening, of who's trading or who's selling, who's buying on those coins that are sitting on exchange. It's a large quantity. I think last time I checked it was like 15%, 14 to 15% of the coins sitting on centralized exchange. So that's where the activity happened. That's where when you have a DeFi summer with 600 new accounts joining the game, they're going to be playing. They're not going to be buying and holding and sitting on their cold wallets. That's not how it works. So the active addresses. So every time there's a new account that is depositing or withdrawing from an exchange, for example, the exchange will create a new address. So it doesn't matter if this address has been sitting there for years or if it's a new address. It's the number of addresses active over the last 24 hours. So to normalize that data, we tend to use the 1 week or 1 month average numbers. But as the report shows, we have been stuck, I think, nearly at 200,000 daily active addresses for the past 6 months, despite the price increase from $15,000 to $24,000. So that tells us
Mhm.
it's an indicator, one of those, that adoption is not increasing, which is not a good sign.
Yeah. Yeah. And further to that point, we had the crypto quant contributor by the name of Yonsei Dents basically compare the price action of the previous bear market bottom to the current one, if it really were the bottom. And what he found was that the 30-day moving average of active addresses increased following the end of the 2018 bear market and the March 2020 COVID-19 flash crash. But the 2023 rally in Bitcoin has not been accompanied by the same trend in active address growth. So it seems like, the long-term hodlers that everyone's talking about, those of us in the diamond hand category who haven't sold our Bitcoin in over a year, we can only do so much, right, Marcel? The long-term hodlers can only do so much in terms of keeping the price of forming a price bottom. At some point, we need new blood in the market. We need more adoption. We need more people to be active on the Bitcoin scene and to actually understand what this technology is and to actually start using it and start adopting it. That's what's needed for Bitcoin to continue its growth over the long term.
Yeah, it's important for our viewers to understand that many people say, "Oh, Bitcoin is a Ponzi," or "Bitcoin doesn't have value." If you buy and hold Bitcoin, you're not participating on the price debate that is happening on exchange right now. So if you bought Bitcoin a week ago and you send to your cold wallet, it doesn't matter if the price right now is trading at $15,000 or $30,000. You're not participating on the price debate. So
Mhm.
if people keep saying that only old market participants benefit from the price hike, no, it's the other way around. Old
Mhm.
market participants who bought 4 years ago, 8 years ago, they had no saying on the price over the past 7 years or the past week or today's price. So it's the opposite
Mhm.
of a Ponzi scheme.
Exactly. Yeah, don't listen to Charlie Munger or those people who don't really understand what Bitcoin is. The idea that Bitcoin is a Ponzi is quite laughable, and I think Marcel, you explained that very succinctly there. So, having said that, we talked about Bitcoin active addresses. I want to get to the next market news article here, and that's around stablecoins. I mean, stablecoins have been really in the news for years now. I mean, Marcel, you've talked about Tether at length. We've always been speculating about whether stablecoins are fully backed, whether they have full reserve status. I know Tether has made some headway into trying to showcase the composition of their assets. but it still seems like stablecoins are coming under regulatory scrutiny. And this article here by our friend Derek Anderson, who's our policy reporter or one of our policy reporters, wrote this article yesterday talking about how many stablecoins are falling short of coming regulatory recommendations, according to the chair of the FSB. So the chair of the FSB is basically saying that uh, there's regulation around stablecoins is coming, and existing stablecoins will likely fall short of those regulatory guidelines. And here, we'll read the first paragraph here for you to set the tone. The Financial Stability Board, which is affiliated with the Bank for International Settlements, the chair, Klaas Knott, has outlined how the organization plans to address key threats to financial stability this year in a February 20 letter sent to the G20's finance ministers and central bank governors. Crypto assets and DeFi had a prominent place on the list of challenges the FSB saw, and the G27 Ministers and Bankers Group is meeting February 24th, 25th in India. So, Marcel, what's your general take on potential stablecoin regulations, and where do you think most stablecoin issuers fall short? Is it the fact that there's still question marks about how the stablecoins are backed, or are central banks going to take issue with the fact that these private companies are basically minting fiat linked currency that perhaps could circumnavigate sanctions or other financial intermediaries? What are your thoughts on the potential issues with stablecoin regulation?
So Sam, what I don't know how the governments will react. I definitely
Mm,
think that they will try to ban or to limit the use of stablecoins because, as you
mm,
perfectly said and described, it can be used to circumvent restrictions. For example, if there's a
mhm,
person in Russia and Russia is banned from the international remittance system controlled by the BYS, which is the SWIFT system. And this person
mhm,
starts using stablecoins to send and receive money abroad. So effectively, he's bypassing sanctions and regulations. So I do
mhm,
think that the governments will try to ban it. I don't know the angle that they use. Perhaps, for instance, you can say that, well, USDC coin is fully regulated. That's not a problem. A person in
mhm,
whatever country buying and using it for remittance, that's not a problem. But if this person sends the coin to some, I don't know, uh, DeFi Tumblr to hid where the coins come from, or some DeFi yield not approved by the governments, then you
mhm,
created some species of derivatives. You're using the stablecoin to create a derivatives to gain yield
mhm,
to use for it fixed income or to use to buy
mhm,
securities, etc. So I don't know the
mhm,
angle that regulators are going to take,
mhm,
but they're certainly going to try to
mhm,
ban it. Tether, in that case,
mhm,
has an advantage because it is already outside of the United States, doesn't follow any regulations. The company is situated in some I forgot the name of the island in the Central America, but it's outside of U.S. regulations. So
mhm,
it's going to be bad news for the regulated stablecoins such as Paxos and such as Circle USDC coin. But markets,
mhm,
nature is going to find a way. Investors and market participants will find some
mhm.
maybe make or die the decentralized stablecoin, but DeFi and crypto will not go away because regulators don't want it.
Mhm, mhm, mhm. Fully agree with that. It seems like based on their timelines here, the FSB is planning to publish final recommendations, potentially impacting stablecoin regulation by July. So we could start seeing more movement on the regulatory front later this year. Something to really keep in mind, something to monitor. Marcel, I completely agree with you that regulation won't thwart, the Bitcoin revolution or DeFi, and Bitcoin being the original DeFi. But regulation could have implications, especially on the types of projects that launch and how we're able to access crypto assets. We're starting to see that regulatory bottlenecks building up in the U.S. A lot of people are very upset about it. It seems like Gary Gensler has a axe to grind with the industry. Um, a lot of us are wondering whether it's in good faith or whether he's actually looking to protect investors, or whether the unintended consequences is really just choking out innovation in the sector. I guess we'll see which side of the debate wins as we move forward. So, on that note, I think we'll go on now to the third news article that we wanted to touch upon today. And it looks like the bear market blues continue. The fallout from the FTX collapse has impacted yet another company. An article here on February the 20th, written by Ezra Regira. Hedge fund closes operations after losing funds in FTX exchange, according to a report. So the company, the hedge fund in question, is Gallows Capital. It'll return 90% of
Galois
their available
Capital.
funds.
Yeah,
Gallows Capital will
Galois.
return
Yeah.
90% of the available funds to investors and temporarily hold on to the remaining 10%. So it looks like here the FTX contagion, the spillover continues. We just found out now, reportedly, that the hedge fund has thrown in the towel after half of its assets got trapped in the bankrupt crypto exchange FTX. We've been reporting on FTX ad nauseum for the past 3 or 4 months. Probably one of the biggest collapses in crypto history, probably the biggest if you take a look at the impact and the size. And we've seen so many companies now go under because of their exposure to FTX. Marcel, is there more blood to be spilled due to FTX, or is the contagion effect starting to wear off? What do you think?
I think two things are important to notice here. The first one is that Galois Capital used to be the biggest derivatives options trader in the market. At peak, if I'm not incorrect, they had over $500 million under management. And this guy used to say on Twitter that his opinions used to move markets, and you just realized that half of his money was sitting on FTX. So these guys could have been the best traders in the world, the best derivatives traders in the world, but unexperienced risk managers. So I think there's a lesson in there for every trader, every crypto investor. It doesn't matter how experienced you are or how confident you are on your trades, you can never leave more than 20% of your investment on a single platform. It doesn't matter if it's DeFi or centralized, there's always some kind of risk when you're talking about cryptocurrencies. And more importantly, uh, you cannot trust a third party, even if it's a known fund manager, such as Grayscale, the GBTC. When I got in the markets in 2017, GBTC, the Grayscale funds, used to sell themselves, to market themselves as the regulated Bitcoin, because you were buying a trust fund that was listed on the US stock exchanges. So it was there was some kind of regulation. Their books were audited. They could only buy from North American exchange. They have to use a third-party custodian, etc., etc., etc. And what happened in the end? Well, 50% of those shares are currently trading 40 to 50% below the Bitcoin value of those funds, because there's lots of risk involved and you cannot redeem those shares. So if somebody entrusted their money saying, oh, I want a safer Bitcoin, I want some institutional fund manager to manage it for me, well, you are now down 40% below of what Bitcoin dropped or what Bitcoin went up. You're losing 40% because you trusted the third party. So don't do that.
Yeah. And just so everyone's aware of what's happening with FTX, I mean, the bankruptcy proceedings, these could take years. So I know Sam Bankman Fried is trying to find where the funds are. There's some reports that they've collected or they've found, whatever the hell that means, billions of dollars in funds that were unaccounted for. But this could take years. And even here, according to the article, Kevin Zhu, who's the co-founder of the hedge fund, basically said that or implied that the bankruptcy proceedings, we could get our money back or a portion of our money back, but the bankruptcy proceedings could take a decade to really resolve. So a lot of lawsuits are coming out right now targeting FTX, as well as other failed centralized platforms like Celsius. It's been a really, really hard time for a lot of people. And the FTX one hits especially hard because, it was in the back pocket of a lot of politicians. FTX was basically synonymous with the crypto industry. They had their name on stadiums, arenas. They were backing politicians on both sides of the aisle. You had celebrities, you had commercials, you had Super Bowl ads, you had this entire image about an exchange that was highly liquid and really pushing adoption of crypto forward. We talked about Bitcoin active addresses earlier. I mean, I'm not necessarily a fan of a lot of centralized exchanges, but a platform like that, I think, would have been positive for adoption if it weren't for the fact that it was an entire scam all along. So it seems like the contagion effect is still it's still affecting the market overall. I mean, I don't know how many more dominoes are going to fall, but this was the latest one. So we'll keep monitoring it. We're going to have the lawsuit, or the SBF will be in court in October. So I'm sure we'll be covering that when the time comes. That's all the screen share that I have. Thank you, Danilo. I think those were the three main articles we want to talk about today. Marcel, do you have any other comments, any other feedback, anything you're seeing in the market that you want to inform us about while we have time?
Yeah, yeah. Yesterday, I sent out an article about bulls ignoring the recent regulatory FUD by aiming to flip $25,000 to support. But basically, what the article says that if there's a lot of FUD, if there's a lot of negative news out there, it doesn't matter if they're are real or not. For example, the regulators fined the former NBA player Paul Pierce for false and misleading statements regarding Ethereum Max, some scam token. There was a story on Reuters about Binance US moving $400 million to a hedge fund or a market maker, Merit Pick, which is also controlled by CZ, from the CEO of Binance. There was the New York Finance State Department ordering Paxos to seize the minting of the Binance US dollars. So there were a lot of bearish news, and Bitcoin sustained at $24,000. And the derivatives indicator, such as the stablecoin demand in Asia and the Bitcoin futures premium, they held a neutral to bullish tone. So not the retail, both the retail investors and the professional investors are not getting worried, are not selling or are not panic selling every news that happen. So that's the most important thing that you want on a bull market. It's that bearish news or FUD has no or very small impact on price. So I came out with a really positive view of such bearish news flow. Meanwhile, Bitcoin held the $24,000 level most of the time. So the limited impact of regulatory action is a positive sign. So regulations cannot make the price go down from $25,000 to $15,000. That happens when people get panic, when people think I'm going to lose money, or my coins are going to be blocked forever, or Binance will not exist anymore and I will not be able to trade the coins. But if you have your coins, doesn't matter if it's Bitcoin or Bitcoin, on your cold wallet, even if the exchange ceases to exist, you can still send it elsewhere or on DeFi and trade them. So you should not panic because of regulations. So I think that is marking a new bull run that may last for 2 years, that may last for 5 years, that may last for 6 months. But bearish news not having impact on the price is really good.
Yeah, and Marcel, I've pulled up the article here that you wrote, and you really laid it down here very well. So, you talked about the limited impact of regulation, which is being a positive sign. But we also want to look at why some investors are positive and why the price is rallying. So here you can read the article for yourself, everyone. But while Bitcoin's 15% price gains since February 13 is encouraging, the regulatory news flow has been primarily negative. So that really means that investors are excited by the US Fed's decreased ability to curb the economy and contain inflation. Hence, one can understand how these bearish events could not break crypto traders' spirit. So we're seeing some positive reaction potentially to monetary policy or the Fed signaling that we may hold off on raising rates or the pace of future rate hikes is going to slow because inflation growth appears to have peaked and is beginning to moderate. We also see a continued positive correlation between the S&P and the Bitcoin price, and Marcel here breaks it down. The correlation with the S&P 500's 50-day futures remains high at 83%. Every correlation, everything above 70% implies that Bitcoin and the S&P are correlated, and we're seeing stocks, they have been moving in a positive direction for the past while, combined with the DXY having peaked last year around the fourth quarter. There seems to be some positive signs here that are counteracting the regulatory FUD that we're seeing. And ultimately, Bitcoin has held up fairly well. We're still north of 24,000 despite all this negative action that we've seen. So potentially there's quite a few reasons to be bullish. Know that we are still pretty early in the cycle. We talked early at the outset where we are with respect to the halvening. It could take a few more months before we see more positive price action. And if you all recall, the previous halvening that Bitcoin had was followed by the DeFi summer, the famous DeFi summer that we all remember. So potentially lots to look forward to. I've always said 2023 will be a positive year for Bitcoin. I'm not expecting new record highs or anything like that, but I think that from a price perspective, we will print a green candle for the year, just based on everything that we know of Bitcoin's prior action. Thanks for sharing my screen, Danilo. And uh, Marcel, back to you. Any final words? Any final thoughts before we break for the day?
Yes, I would say as doesn't matter how much we want crypto to decouple from traditional markets. The Federal Reserve is sitting on $8 trillion reserves. That's a shitload of money. I'm sorry for the wording that I have no other means to describe it. So whenever the Fed raises interest rates and there's a $32 trillion debt, it's $1 trillion that they're going to have to print every year just to pay for the debt interest rates. So there's no unless the US dollars devalues a lot and loses more, another 99% of its purchasing power, which will happen, but it's going to take maybe 10 years. We still have to pay attention for those movements. And the Federal Reserve is signaling to us that, yes, they want to keep raising interest rates, but they're going to do it very slowly. So the markets are always 2 steps ahead of the game. So they're already thinking, well, if there's if they're no longer increasing 25, 50, they're increasing 25. So maybe later on the year, they're going to pivot. So they're going to start lowering interest rates to stimulate the economy and avoid a recession. So remember, professional markets are always 2 steps ahead of the game. So when you're reading the CPI and trying to trade for the short term, those guys are already thinking what the next CPI is going to be, what the Fed will do 6 months from now. So they're not trading based on the data that we're seeing on screen right now. They're trading based on projections. So if the Fed pivots, if or when the Fed pivots and starts taking the interest rates down, it's going to be an excellent scenario for risk assets, including cryptocurrencies. I don't know if it's going to happen this year. I don't know if it's going to happen over the next year, but there will be time for that. So keep an eye on what the Fed is doing. So just reading Cointelegraph will be very good for you. We have many analysts and news writers that cover that stuff, including Sam Burgi. So make sure not to think that if Bitcoin rallies to $30,000 without S&P bottoming, that we can go back. So just make sure to follow the traditional markets as well.
Very, very well said. And if you're watching, know that the phrase Fed pivot is going to be highly Googled, and keep track of that term, Fed pivot, because you're probably going to hear a lot more of it in the second half of the year into next year. I think their natural inkling is they want to ease. Marcel mentioned earlier the interest rate on the debt is an astronomical amount. I think their base case is we want to ease, we want to stay easy, but we now have to tame the dragon that is inflation. So keep an eye on that phrase. I'm sure you'll hear a lot more of it. We'll be talking about it a lot more, and just keep your eye on the prize. Keep stacking the Sats if you're so inclined. I know that's what I'm doing. Not investment advice, of course. And that covers it for today. I think it was a great 40-minute chat, Marcel. Thank you so much for your insights, and thank you all to the loyal viewers for tuning in today. We'll catch you next week for another installment of the Market Report. Take care.